In the second part of our interview, we're going to address the question of whether or not a country could start issuing debt in Bitcoin. So Lyn, in the second part of this discussion, I'd like to address a recent article you wrote, another brilliant read, Gold and Bitcoin as Popular Assets. And before summarizing the article for the audience, I really want to get your thoughts on the recent move from El Salvador to legalize Bitcoin as legal tender, because you and I haven't spoken after that happened. I've spoken to some other people about it, but I want to get your take. So, as you know, they've adopted legal tender, Bitcoin as legal tender, the first country to do so, and it's very interesting. It's a very interesting dynamic. On the one hand, I've got crypto hodlers telling me this is obviously a great move. On the other hand, I've got economists telling me that, in their words, dark forces are taking over El Salvador. This is a ploy to launder more money, and they're going to get flagged by the Financial Action Task Force, potentially get sanctioned by international regulatory bodies. So I'm getting a range of opinions here. Why do you think they did this?
Well, a couple of reasons. One is, anyone following that news over the past couple of years, rather than just the recent headlines, is that El Salvador is very reliant on remittances, and so basically, if someone gets remittances, someone in the U.S., like a relative in the U.S., sends them money. It goes through something like Western Union, so they pay a pretty high fee. There's only a handful of places that they can go to in the country in order to get that money, so they take a long bus ride in order to get that remittance. Usually, there's some gangs that, for example, would patrol those areas because they know people are coming out of those places with cash, and so you kind of, you risk, getting mugged. And so basically, this is an application of software to that problem where you can say convert dollars to Bitcoin, send over the Bitcoin, convert it back into dollars. Or now with this recent law, it can just stay as Bitcoin and be spent as well. And so basically, the government is, as by making it legal tender, there's no taxes on Bitcoin transactions. It's not like you're going to pay capital gains taxes. In addition, it basically increases the number of places that would accept it. Now, those merchants could just convert Bitcoin back into dollars right away if they want, because basically the wallets that they're using allow that to happen. And so I wouldn't view it as a money laundering issue because, for example, multiple analysis firms, including firms that work for law enforcement to kind of track these blockchains, they generally find that overall illicit activity on blockchains is actually a very small percentage of the transactions there, and that's because if you think about it, I mean, doing shady, illegal business on a immutable public ledger is generally not the best place to do it. Generally, cash is still the best place to do illegal activities, and so I wouldn't view it from that lens. I think instead they're viewing it as El Salvador is trying to attract, say, crypto type companies, Bitcoin companies, trying to attract maybe wealthy Bitcoiners, maybe trying to reduce the fees it's paying on remittances. And so, it is a troubled country. And so this is kind of a high risk, interesting way to, I think potentially improve their standing. But it does come with implementation risk, and risk of being, kind of excluded, in their efforts by the IMF and other organizations.
Do you think Bitcoin is in itself even a reliable form of payment? Because in a country where many people don't even have bank accounts, imagine going to the grocery store and buying, a bunch of bananas for X number of Bitcoins, and then the next day it doubles, and then the next day it halves. Wouldn't that be very frustrating for somebody in a developing nation?
Yeah, so potentially. The challenging thing there is that because they're underbanked, that's where, it's sometimes ironically easier to get a cheap smartphone than get a bank account. And so when you have like say a free Bitcoin wallet on a cheap cell phone, that actually can make transacting easier in some cases. But yes, there is volatility risk, and so a lot of them, for example, can convert back to dollars if they decide they don't want to hold large amounts of Bitcoin. And so it's one of those things. It depends on what country you're in. So El Salvador is dollarized, and so they
Yeah.
generally have that access to that stable dollar. Whereas many other countries, for example, their local currency is in some ways more volatile than Bitcoin. Usually to the downside, whereas Bitcoin at least has upside and downside volatility. And so it really kind of depends on what market. Now, the challenging thing for El Salvador is that they're basically relying on dollars, but they don't really have they're basically reliant on, say, a foreign centralized source of those dollars, right? So they're reliant on remittances. They're susceptible to, say the United States devalues its currency by doing stimulus. Well, El Salvador is not really benefiting from the stimulus, but they are being impacted by the devaluation. And so, they basically have a couple different incentives there, I think, to try to diversify their monetary base to some extent.
Do you think it's ever possible to see El Salvador or any other country start issuing sovereign debt in Bitcoin or cryptocurrencies?
So it's possible. I mean, that's one thing that essentially emerging markets do now is that they issue debt in dollars, which for them is like a hard money because they can't print
Exactly.
dollars, and so that's something we see in emerging markets for decades now. We also see this precedent, for example, in India. India has bonds that are linked to gold, right? So it is possible you could see a country do it in Bitcoin, but it'd be a risk, right? Because if on one hand, if Bitcoin goes down, that would benefit the bond issuer. On the other hand, if imagine if you issued Bitcoin related bonds a year ago, right, when
Yeah.
Bitcoin was like under 10,000, and now it's over 30,000. At
Hmm.
some point, it touched over 60,000. You would have default risk from Bitcoin going up that rapidly. So the only way it would make sense if somehow it was tied to, say, Bitcoin related revenues. And so some people, for example, floated the idea that because El Salvador is potentially interested in say Bitcoin mining using its geothermal energy, they could potentially fund some of that capex with Bitcoin linked bonds, but at least it would be tied to Bitcoin based revenues. So, but if unless you structure it like that, it'd be quite risky to do.
Yeah, I mean, I think the same argument could apply to personal debt too, right? Imagine El Salvadorian borrowing money in cryptos, and the value of that debt goes up. And well, I suppose the value of the salary may proportionally go up as well. But suppose it doesn't, then yeah, you would have default risk on across the board.
Yeah, anytime you're dealing in multiple currencies, you have to be aware that when you issue debt in one currency, but your revenues are either completely or partially in a different currency, then you have that major risk. And especially when you add on to the fact that Bitcoin has very high volatility, that is a significant risk. And so,
Yeah,
I certainly wouldn't recommend people have their revenues in dollars and then their liabilities in Bitcoin. Now you
makes
could,
sense.
say if Bitcoin collapses, you could have a nice windfall there, but you're also vulnerable to Bitcoin going up 5 or 10x in the next
Okay.
decade and then getting messed up.
You've written a number of articles on your website, lynalden.com, about gold and Bitcoin. The latest one is entitled, well, it compares Bitcoin and gold. Why gold and Bitcoin are popular, an overview of bearer assets. So, one of the arguments you've made is that both assets are more or less decentralized. Now, you don't have to rely on a centralized treasurer to hold these assets for you. Why is that an important facet for investors?
Well, so in most of us, we live in developed countries, and so we generally have a reasonable degree of trust in our financial system. Our equities and our bonds are held by institutions on our behalf. Now, but that's never like a risk-free proposition, right? So many investors prefer to have some of their assets held in things, being able to control it themselves. So it could be collectibles and things like that. But if they want something more liquid and fungible, there's only a handful of things that you can hold. So physical cash is one example. But of course, that gets devalued over time. So you generally don't want to hold large and large amounts of physical cash. And so that mostly leaves precious metals and cryptocurrencies, where basically you have this asset that can be, self-custody. So you're not relying on another institution to hold it for you, and you can exchange it with a third party, again without kind of relying on some sort of centralized, say, banking system to basically allow that transaction to go through. And of course, gold and Bitcoin shine in different areas, right? So I mean, obviously, if you're say the power goes out, like say Puerto Rico was impacted by hurricanes years ago, and so for example, having physical cash or say physical silver coins would have been very helpful in that type of environment, whereas say Bitcoin would be less useful. On the other hand, if you're trying to transact internationally, or if you'd like to say you're in one of those countries that has some sort of political strife and you want to leave, basically it's very hard to get say gold through an airport, whereas you can memorize a Bitcoin seed phrase, you can have Bitcoin on your phone. It's far easier to basically get Bitcoin out of a jurisdiction if you were self-custodying it to begin with. And so basically, self-custodying assets is a way that investors around the world can basically de-risk some of their assets. And of course, certain jurisdictions that ends up being more important than others.
Okay, what about gold and Bitcoin as forms of currency? This is a topic that's been discussed many times on several different platforms. I'd like to get your take. Of course, Bitcoin has problems in itself, but recent improvements in this protocol, including from things like Lightning Lab, Lightning Network, they've aimed to make transactions cheaper and faster. So how does it stack up against something like a gold coin, for example, which intrinsically has no transaction cost? If merchants accept gold coins as a form of payment, as a form of money, then it acts as money. It acts as like it's like a fiat dollar bill. How do they compare with each other?
Well, it would depend. I mean, if you're in person, then that transaction can work very well and very cheaply. If you were trying to transact, at a distance with gold, it'd be one of the worst ways to do it. If you were trying to transact across borders, or try to transact basically at
Good
long
point.
distance e-commerce, and
Yeah.
so different tools for different purposes. So one of the advantages of Bitcoin is that you can do a say $100 million transaction for $5 with someone on the other side of the world. And so that's hard to replicate with other forms of payment. On the other hand, if you're using it for everyday items, the volatility of Bitcoin is a lot more challenging than with gold or dollars. And so that's why I like to view Bitcoin as an emergent thing. It's not something it's reached its steady state yet. It's basically a 12-year-old project that has gone from zero to $1 trillion of market cap. Now it's several hundred billion, and because it's been corrected. But basically, we're watching this thing kind of monetize in real time, and investors are basically juggling between themselves trying to figure out what is the total addressable market of this protocol. Will it go up to 5 or 10 trillion or more, or will it kind of peak at a trillion and then kind of settle down for a while? And so it's not reached a steady state in the same way that say gold or dollars generally have. And so right now it's still in that kind of a accumulation phase rather than that daily spending phase. But now that Lightning and other things are making that easier, it actually is getting more usable for that medium of exchange purpose, especially because if you can separate Bitcoin, the asset, from Bitcoin, the monetary network, is you can actually, for example, use Bitcoin to exchange fiat payments using some of the advantages of the Lightning network, the fact that it's instantaneous, permissionless, and can be useful for international payments. And so that's actually, for example, what El Salvador is focused on, not just Bitcoin, the asset, but also Bitcoin, the payment network itself, even if
Right.
merchants sometimes prefer to use dollars.
So what's ultimately your investment case for either of these assets? It seems to me like their utilities are vastly different from one another. So why even philosophically speaking compare the two? What's your case for investing in Bitcoin and what's your case for investing in gold?
Well, I think the reason to compare them, one is, I mean, obviously we have large groups in either side often that basically disagree with each other. Whereas I'm one of the people that I like both gold and Bitcoin. But the reason they're compared is because they basically represent non-sovereign money, right? So money that's not issued by countries, that basically the market has decided it is
Hmm.
money. And so that's where but from there, the similarities kind of end. And so gold, obviously, it's got thousands of years of history. It has much lower volatility. And so what gold mainly is a hedge against negative real rates over long periods of time. And so basically, gold can hold its value when fiat currency gets devalued from interest rates not keeping up with inflation. Now, that doesn't mean it
Yeah.
holds its value over any given month or quarter, but over a multi-year process, unless something were to happen to demonetize gold, it generally holds its value very, very well over the long term. Whereas Bitcoin, on the other hand, is this much newer asset. It's programmable money. It opens up a lot of kind of new avenues for payments. It basically has some advantages over gold, some disadvantages. And so right now it's a more volatile asset that's kind of finding its place in the world. And so there's the potential gains if it were to become kind of this long-term self-sustaining network is much higher than gold. On the other hand, there are more tail risks that could damage the investment case for Bitcoin compared to kind of permanently damage the investment case for gold.
Okay. Now let me give you an investment case, and then feel free to disagree with me. I like to see what you think. If I were to allocate a portion of my holdings into a cash equivalent, let's say 5%. Back in the day, it would just be gold before Bitcoin. Now, let's say now you have Bitcoin and gold. Does it make sense to hold both? Because what I would consider doing is just to hold one at a given time. And like you said, gold is a hedge against negative real interest rates. So if I consider that negative real interest rates for rather are not going anywhere, or perhaps would go into positive territory, I would actually just hold Bitcoin for now and then rotate that into gold when I deem the conditions in the macro landscape to be more favorable. Would that be a viable strategy, you think?
I think that really depends on the goal of the investor. And so there are
Okay.
traders and there are investors. So basically, if you're trying to make macro calls about, say, a given 6-month period, then it would make sense to rotate from gold to Bitcoin, and sometimes out of both or sometimes into both, based on different circumstances. Whereas if you were using them basically as an all-weather portfolio, right? So you want to say a non-zero allocation to gold or a non-zero allocation of Bitcoin at all times, you maybe have that as kind of a base allocation. And then, the investor could choose to add more to one or the other if they happen to think, say, that the next 6 to 12 months are bullish conditions for that type of asset. And so that really comes down to what decision the investor is making regarding their overall strategy, and not just for those assets, but again, for how they treat equities, for how they treat bonds, for how they treat, say, domestic versus international exposure. It really depends on whether they want to have that, closer to an all-weather strategy or closer to a trading strategy or somewhere in the middle.
And finally, what's your outlook for both? Which do you think has good upside for the remainder of the year?
So the remainder of the year is challenging because, again, it's going to largely depend on some of these policy decisions. So
You can
Bitcoin's
extend your
already,
horizon if you like, yeah.
yeah, Bitcoin's had a pretty significant correction here. I think if it can hold 30,000, then I think, when you look out, say, 12 months, it's still pretty positive for the protocol. In addition, if you look at gold, for example, that one it's also been in the kind of weaker price action. It hasn't obviously had the volatility that Bitcoin has had to the upside or the downside. I still think both of them look pretty favorable with a 12-month view. But there are some tail risks that could sink that, right? So, for example, we could see, say, increased regulatory action against Bitcoin that could, damage that 12-month view, or we could have, for example, a period of positive real interest rates that could sink gold further. But though, because those environments are, that say positive real interest rates are so untenable for markets and for government finances at this point, I would expect that to be a relatively short-lived phenomenon and something I probably would want to buy into that weakness. And so basically, I'm still viewing them with kind of positive long-term structural, outcomes here. And so I would potentially be an accumulator on periods of weakness.
Excellent. Thank you so much for coming on the show today, Lyn. And where can people follow your work more?
So I'm at lynalden.com, and I'm also active on Twitter at lynaldencontact. Thanks for having me.
Excellent. You have 220,000 subscribers now on Twitter. Congratulations. Fast growth. When I met you last year, you had around 70,000. So congratulations on that. Thank you again for coming on the show. I look forward to speaking with you next time.
Yep, you as well.
And thank you for watching Kiko News. I'm David Lyn. Follow me at DavidLyn_TV on Twitter and subscribe to our YouTube channel.
What just happened here was a fucking miracle.